Welcome everybody to the Daily Recap Show where we talk about stocks and the financial markets. My name is Chase. If you like this video, please subscribe, hit that notification bell as well as the like button and leave a comment for the algorithm. Let's get into it. This is the daily heat map of the S&P 500 and US stocks soared on Friday as Federal Reserve Chair Jerome Powell opened the door to a September rate cut during his highly anticipated speech at Jackson Hole. Everything was green, super green. Last time I saw this much green, it was Christmas. We had Christmas trees up and running in our house. The only red we really saw today were defensive sectors, right? Telecom services, T-Mobile, Verizon, they were in the red. This is a defensive sector inside communications. And then we saw stuff like Walmart, Costco, Coca-Cola, Philip Morris, the quintessential staple sectors, they were red. Everything else was green apart from a couple of names that reported earnings, stuff like Intuit, stuff like Workday, that was down 2.77%. Medical devices here, very, very interesting. Again, it has to do with earnings. But other than that, we saw outperformance in the mega caps, Google, Meta, Amazon, Tesla, Home Depot, Apple, Microsoft, Nvidia, semis for the most part, software for the most part, financials. In fact, every single sector was green today except for staples. You could see that staples was green and it was just a risk on rally, taking money in money market funds, just taking general liquidity and putting it to work in the market. And that is why we saw everything from utilities, healthcare, all the way to discretionary outperform. And the stuff that outperformed the most were just cyclicals and sensitives, XLY, XLE, XLF, XLI, right? These are like highly sensitive, highly rate sensitive names, and they just outperform. Look at real estate as well with the S&P 500 up 1.54%. But this is large caps. Large caps underperformed mid caps, which underperformed smalls, and smalls really putting on a show, right? Because they are the most sensitive to rate cuts. They are the highest beta, and they all performed up 2.5%, 3% here for core, 3.5% for value. Mid caps also putting in a very solid day, but that's not to say large caps didn't perform. I mean, anytime you see large cap growth, core, and value up 1% in excess of 1%, you take those gains and run with it every single day of the week. All I'm saying is we just saw outperformance in the smaller size segment. We saw broad global market performance, right? Excluding India and the Southeast Asia segment right here, we saw outperformance in China, Europe. Europe was very, very green. South America, North America, the United States, Canada, Mexico, South Africa, the Middle East, everything was very, very green today. And we all know why. It had to do with Jerome Powell, the Jackson Hole speech, and he pretty much signaled a policy shift. I mean, now, Jerome Powell said a whole range of things, citing job risk and employment rising. He also came out and said the base case is that the tariff impact on inflation will be short-lived. And then the big thing, the reason why the market rally was an exact quote. He said the baseline outlook and shifting balance of risks may warrant adjusting our policy stance. In that moment, we had an instant reaction. Stock futures rallied, the dollar tumbled, the 10-year treasury yield fell, gold jumped up, and it was risk on from that point onward. And pretty much Powell's comments reinforced bets on a September rate cut. And the only question now is not if we get a rate cut, is it do we get 25 or do we get 50? And again, on the back of this, real estate stocks ripped. Open Door Technologies was up 39% today. Crazy move. 3% year in the after hours. High beta names like Zoom were up 12%. Now, there was some stuff with regards to earnings. We're actually going to cover Zoom as well as Open Door on the second YouTube channel. So go ahead, like and subscribe to FinFluential Media. We even saw mega caps rise. Apple was up 1.3%. And there was also news that Google's Gemini could power Siri's new voice assistant. Intel was up 4%. So even semis rose. But again, there was also news here with Intel that the US will take a 10% stake in Intel itself. And you can see here that it was exceptional market breadth. 1,000 decliners, 5,300 advances. Look at this move right here. We almost never see this, right? Absolutely insane. And we actually had more gainers in the 2 to 5% region than the 0 to 2% region. Absolutely insane market breadth. Now, when you look at net inflows, you may look at this and say, hey, we saw net outflows in the Nasdaq and New York Stock Exchange. However, this is just on an intraday basis. It doesn't actually count the gap up we actually saw on inflows. If you consider the gap up, there were definitely net inflows in the market. And we know this for a fact because the S&P 500 was green today. Market momentum continues to remain exceptionally solid. Everything from the 5-day to the 200-day remains above the 50% mark. Market breadth is great. Market momentum is solid. And when we look at the charts, guys, we could see that high beta definitely outperformed this week, particularly here on Friday. Ethereum was up 13% on Friday, up 10% for the week. The RTY outperformed. China stocks outperformed. Mid caps were up 2.67%. And you can see everything gained over the last 5 days. It's hit the Nasdaq 100, which was actually down 0.92%. Very, very interesting. I think a big reason why we also saw a massive move up here in many stocks is because over the last 5 to 6 days, we've had consistent down days from the all-time highs we made at the start of last week. But all in all, it was a very bullish day. And when we look at these indices on a year-to-date basis, things pan out very, very good. We could see US stocks, the S&P 500 and the Nasdaq 100 double-digit gains, near double-digit gains for the year. The RTY approaching mid-single digits along with mid-caps. Bitcoin up 24% year to date. Gold outperforming Bitcoin. Very, very interesting. European stocks, the FEZ, the stocks 50 index was up 30%. China stocks up 30%. Silver up 34% year to date. And then the biggest winner was Ethereum up 44%. But you know what's crazy? At one point, Ethereum was down 60% year to date in 2025. This is the type of volatility you can expect from crypto assets, and up nearly 200% to get to the highs where it is right now. Absolutely insane. But it's been a crazy, crazy day here for the markets. But let's talk about the S&P 500. Now, a bullish day through and through. You could see the S&P 500 up 1.42%, flirting with these all-time highs. The same is true with the Nasdaq 100. Very, very strong day across the board. But again, like I said previously, outperformance in mid-caps, small caps, the broad market, very, very strong. We also saw very bullish momentum in European stocks, Middle Eastern stocks, Chinese stocks, even India stocks, flat here on the day. Very interesting. Now, crypto taking a bit of a back seat, but that's after a 14% rally intraday here for Ethereum and like a 4 or 5% rally for Bitcoin. So we're probably going to see a bit of a cooling off over the weekend. Crypto is open on the weekend, and then we'll continue the rally into next week. You know, after a 14% move, you do have to have a little bit of a pullback, have a little bit of a breather. It's healthy for typical market momentum. After what we saw today, after Jerome Powell's speech, we saw yields fall. I was expecting probably a bigger move in the 10-year yield as well as the 30-year yield, but we definitely saw a big move here in the 2-year yield, now below the 3.7% mark. So the market actually pricing in now potentially 3 cuts before the end of the year, at least 75 basis points or 3 cuts of 25. Volatility was down, hitting the 14 mark right here. The dollar fell as well. TLT bonds ticked up, gold ticked up, silver ticked up. A very, very interesting day of trade. Jerome Powell coming out dovish, probably confirming the fact we are getting a rate cut in September. Markets like to love it, and you could see at the weekly chart we're flirting with these all-time highs in the context of making higher highs, higher lows, and just brushing off the tariff tantrum at the lows right here. If we go to the daily chart, things look absolutely crazy. Look at this like bullish engulfing candle, right? We have like a gap up, bullish engulfing, back to these all-time highs. We'll probably go ahead and hit new all-time highs next week. And I mean, if you're looking at this, if you're looking at the S&P 500 right now, so we've got like a low right here, higher low, higher low, higher low, and then a higher low right here after this bearish engulfing candle and a gap down. Then we put in a new all-time high, and it does look like we're now putting in a higher low. This is absolutely bullish. If we go ahead, tackle these all-time highs right here, I mean, we're just going to signal trend continuation. We may actually like just continue to move up over the next week, and that's what I'm expecting. I do think we probably go ahead, hit all-time highs sometime next week, potentially at the 6,500 area. That's what the core wall is telling us, guys. Remember, this is the core wall right here, and normally the market drifts to these levels if we're above the gamma flip. If we're below, we drift to this level right here, the 6,100 level. But the S&P 500 looks really, really good right now. That's just another higher low after 5 red days in a row. And I think that's exactly what we saw here. We're just seeing a little bit of a reprieve after the day we've just had. Very bullish momentum, and I do think we definitely go higher. If we pull up something like the RSI, you could see that we aren't actually that overbought, so we definitely can have a couple more days of a rally into the start of next week for the S&P 500. The same is true for the Nasdaq 100. In fact, the Nasdaq 100 has more room to run. It bounced right off the gamma flip almost exactly. Buyers came in, bought the dip, and I think we go ahead and hit the 24,100 area in short order for the Nasdaq. 100. Now looking at the RSP, this is where things got interesting. This is all-time high for the RSP. So the RSP hit an all-time high, but to see the broad market, the RSP, the equal weighted S&P 500, right, hit an all-time high, that is insanely bullish. You can see those were the previous all-time highs in December 2024. Now we just hit another all-time high and we're in price discovery mode for the RSP. Things looking really, really solid. Look at the weekly chart right here. That's a weekly all-time high for the RSP. Very, very bullish stuff. I wouldn't be surprised if we go ahead and actually hit the 200 mark right there. And I do think we probably go hit all-time highs in the Nasdaq 100 as well as the S&P 500 this week. Guys, it is definitely risk on. Now, what are some great ways to go ahead and play rate cut volatility and upside risk we're seeing in the market right now? I think you want to look at small caps, you want to look at mid caps. One of them is Lemonade stock. This is an insurance company. It has a lot of momentum. If we do get a pullback, go ahead, enter here. But I think this is like a $75 stock, in my opinion. I think we're probably going to see we're going to see continued momentum in this name. You can see that we're sort of putting a low right here. And I do think $60 is on the charts in very short order. Another one could be EVVTY if you want to diversify away from US stocks. You can see we're in a very, very clear uptrend right here. If we go ahead, take out these highs of the $92 area, $100 is on the mark. Another stock I really do like is Lyft, simply because it's so cheap. It's a great value play. You can see reported earnings right here. It's now above the high right before earnings, breaking above some of these highs and about to go tackle the $17 region. I think $20 is on the table for a company like Lyft. So those are some small cap, mid cap names to take advantage of these rate cuts. I think some of the housing stocks, if you really want to look at like momentum, you probably can look at Open Door Technologies, but this one is a bit more speculative. But like ultimately, you see right there, that would be like a breakout above this level, and then we could probably just go to the $6 region from there. But it's very, very volatile, and I probably put a $4 limit buy order somewhere, or $4.50 limit buy order. Have a bit of a pullback after a 30% move today, and then we'll move higher in something like Open Door. Now let's go ahead, talk about Bitcoin. So it is pulling a bit back here over the weekend, but you can very, very clearly see the buyers bought the dip at these lows right here, where we previously used it as resistance, broke above, and I do think we're going to all-time highs for Bitcoin. We know this as a fact because global M2 money supply is telling us we will go higher, potentially getting as high as the 140,000 region. Now let's go ahead and look at Ethereum. Insanely bullish day. I think Ethereum may have just hit an all-time high here. Let's go ahead and quickly have a look. So Ethereum's previous all-time high was 48.75. The high right here for Ethereum, let's actually be a bit more specific. The high yesterday was 48.85. So technically, it did go ahead and make an all-time high, but it just looks like an exact equal high or slightly below all-time highs on the daily chart right here. That being said, guys, what's bearish about this chart? Nothing. You can see right here, we have lows followed by higher lows all the way up in the context of just making highs, 52-week highs, and potentially an all-time high right here. Okay, this is a very big move. It was a 14% move. We're going to have a bit of a pullback, right? We're going to have a bit of a pullback. And as long as we hold this low right here, we find support, then continue the move up, and that would just mean trend continuation. And the second we get to the above 5,000 region, we are in price discovery mode. And I think 6,000, 6,500, 7,000 is on the table for Ethereum. Now, quickly looking at the 2-year yield, you could see we had a big move down. And I think we're probably going to see yields lower. Maybe not so much in the 2-year yield. I think this is probably where we're going to stay until we actually get that September rate cut. But the 10-year yield can move lower. We're very clearly in a downtrend, as you can see. And I wouldn't be surprised to actually see like 4.1, 4.2% or below in the 10-year yield by September. The dollar was down 1%. Very, very ugly day here for the dollar. We are still looking for a little bit of strength in the dollar, but after the momentum we saw with the Fed funds, we can probably see a little bit of weakness. I wouldn't be surprised if we actually have some price discovery here at the $96 level for the DXY. And then looking at gold, you can see what gold has done. This is the GLD index. It's sort of trade inside this like massive range right here. In fact, let's just go to spot gold futures really, really quickly. And you can see that we've traded inside this range right here, and we're sort of like coiling up, I guess you could say. But ultimately, if we break above this level, right, that would mean probably go higher from there. But if we break below, that means we can target some of these levels. But my bias is for further upside in gold. Guys, and diving into sentiment, this is the fear and greed index, and we continue to still be in this greed zone. We've been fluctuating between extreme greed and neutral over recent weeks, and despite the price action we've seen on Friday and throughout this week, things are not entirely frothy, at least according to the fear and greed index, meaning that we definitely still have room to run to the upside to get into extreme greed. And if we look at seasonality, that could definitely be the case. When we look at August daily performance, right, we can see that from here, the 20th of August into the end of August, which is this week coming up, we can actually see returns of about 1% leading into the end of August. However, that could be an interim top because normally September is when we see downward price momentum. We normally put in a top very early and see lower lows and higher lows into the end of September. But like I've always been saying on this channel for the last couple of weeks, any pullbacks we do get in the market is just a dip buying opportunity. Why? Because the fundamentals are really, really strong right now. Q2 earnings at 12.9, nearly 13% earnings growth. If you actually just exclude the energy sector, right, you're looking at 14.8% earnings growth on 7.4% of revenue growth. Margins are outperforming. 80% of companies reporting above analyst expectations. And along with earnings growth we do know that rate cuts are certainly on the horizon, especially after Jerome Powell's Jackson Hole performance. The market has now priced in from a 60 or below 60 to nearly an 80% chance of a 25 basis point rate cut in September. I think based on his speech, it is very, very likely. And this is going to drive a lot of things, particularly momentum in the residential fixed investment housing market. Right now, when you look at the spread between the 10-year yield and the mortgage rate, it's about 350 basis points. Historically, it's about 150 basis points. And with the Fed signaling a policy adjustment vis-a-vis rate cuts, it means this spread can narrow, it's going to adjust, and this is going to open up the housing market. And residential fixed investment, which makes up about 20% of GDP, will drive the economy moving forward. What rate cuts are also going to do for the market is open up the manufacturing sector. Right now, the ISM is below the 50 mark. If we get rate cuts, this is going to provide fuel for manufacturing. And once we get an ISM above the 50 mark, it does argue for a broadening of the market. And the next leg of economic growth, which previously came from the consumer, is going to come from the manufacturing and residential fixed investment sectors, which again make up 30 to 40% of GDP. But we also need to be watching the data. And next week, we have durable goods orders. We're looking for a consensus there of negative 4%. We're also getting the second quarter GDP revision. So the forecast there is for 3%. So we're not looking for any change. And then on Friday, we get PCE, we get some inflation data. So we're looking for 0.3% right there. This inflation data is going to be really, really key. And then we also get personal income outlays, personal income, personal spending, 0.4, 0.5. That is the consensus. The forecast is actually to come in a little bit lower, as well as the PCE number right here. So this is the consensus forecast amongst all of the banks. And then this right here is the forecast at Trading Economics, where I get this data from. They have their own forecast right there. So they're coming in a little bit below consensus, which is very, very interesting. And in my experience, the Trading Economic forecast is always a little bit more accurate than the investment bank consensus, than the market consensus. Now, looking at earnings next week, we had a big week of earnings previously, and it probably gets even bigger, especially on Wednesday, because we have the big dog NVIDIA reporting, along with CrowdStrike, Snowflake, as well as HPQ. So this is just like cybersecurity, tech, AI, they're all reporting. We also get Abercrombie Fitch, Williams Sonoma before the open, but ultimately the big boy NVIDIA is what we're going to be looking at. We also get PDD on Monday, Heiko after the close. So these two is before the open, after the close. Okta and MongoDB after the close on Tuesday. Then on Thursday, we've got Best Buy and Dollar General. We'll probably cover one of those. And then we also get Dell, Marvell, Affirm, Ulta Beauty, Sentinel One, Iris Energy, Autodesk, Webull Corporation. So a lot of big names here on Wednesday and Thursday. So a pretty big week of earnings nonetheless, guys. But if you've made it up until here, thank you so much for watching. If you like this video, please subscribe, hit the notification bell, as well as the like button, and leave a comment for the algorithm. Cheers.